my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. Overall prices have tracked sideways until about 11 weeks ago. In mid-February we saw this market break higher, but only as far as the June 2021 high at 18,610 and just under the long moving average, currently at 18,110, before a move back down. However, prices started to find a base again at the May 2021 high at 16,610 and around the combination of at the time of the short, medium and medium moving averages. They're currently at 17,950 and 17,230 respectively. It was at this point that I had been contemplating what sort of pattern the market was creating. My initial thoughts were that this might be some sort of rounded bottom, which actually turned out to be true, but limited in its aspect. I next considered whether the action from the high seen back in August last year might make this a possible descending scallop pattern, and held on to this idea for a long time. But the longer I held on to it, the greater the holes I saw in the argument, and this led me to consider whether the descending scallop was and is morphing into another pattern, a bigger and possible bump and run reversal pattern. I'm going to lodge this idea in your and my mind for now and seek to develop it if the market allows me to do so. But I should warn you that a primary topside target would be in the region of 31,200, well off the top of my daily chart. So it's something to bear in mind, stick in your diary if you will, for some future date, but also to look at more nearby and I suppose realistic levels. And look at those first. Finally, I'd like to refer to the elephant in the room, the early February, late March bullish Andrews pitchfork, highlighted in dark blue on my daily chart. This has so far been good at showing the bullish angle of attack of the market. The market is currently just below the middle time, currently at 19,320. The upper time above, currently at 20,630, and the lower time quite a way below, currently at 18,010. I mention the lower time deliberately, as you will note how the short medium moving average, currently 17,950, has been in lockstep and just below with the lower time since the middle of April, a relevant point in any test lower. LME 3-month zinc. For a long time the big picture here was based very much on actions originating from last year, with some limited skewing I suppose, and recently a bit of a battle happening which seems to have been won and lost by the respective sides. You see, as I've said over many weeks, even months here, we've had two competing shift pitchforks. We had a recent late May to mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart, and a second larger bearish shift pitchfork dating from May to August 2022. Back in March, prices finally punched up and out of this older bearish shift pitchfork. However, in early April, when the break higher was finally sustained, the market also started a strong move upwards that in the middle of April broke up and out of the bright red mildly bullish shift pitchfork. This move higher has not been without incident, as prices have hesitated over the last 3 weeks. Initially, though the market hesitated in a specific fashion with narrowing ranges, that led me to draw in dark blue a small pennant pattern peaking in the middle of last week. We've seen a breakout on the upside from this pattern. It's been sustained, we've reached the targets on it, but it didn't look really fully sustained. Thus, an initial target X would be in the 30-40 area, and the harder to reach target X1 would be the 3165 area, which is up off the top of my daily chart. Well, the move up has somewhat lacked enthusiasm, which has prompted me this week to draw a pair of trend lines in purple, currently 2865 to 3004, for what I suggest might be an ascending wedge pattern that has developed out of the pennant pattern. For the moment, I'll just let that sit with you and see what you may think of it and how it develops over the next few weeks. LME 3-month tin. There were in the recent past multiple major patterns acting on this daily chart. This year's action saw the market push back up from the stratified congestion bands below, over all the moving averages up to highs not seen since July last year. This emergence led me to start the discussion with a just barely possible pattern here, mid-October 2023 to late January 2024 inverted head and shoulders pattern, a dark blue highlighted neckline, currently at 26,950. All the targets topside for this pattern have been reached. This then brings me to another pattern, and one related to this reverse head and shoulders, and that is a mid-October 2023 to very early April 2024 ascending wedge pattern. You can see this highlighted by two trend lines. The lower trend line, currently 27,695, which is highlighted in bright red, and the previously mentioned dark blue neckline. The apex of this ascending wedge pattern was passed in early April. This ascending wedge pattern gave me some additional targets above, and all were also reached. On to the next pattern. I said weeks ago, and I quote, "You see, it seems the ascending triangle pattern has morphed into another pattern, this time into a bull channel, a late December to date bull channel, currently 27,695 to 3840, end of quote. To help aid in seeing this pattern, I highlighted the upper bull channel line, also in bright red, same as the lower bull channel line. I said 10 weeks ago, and I quote, "Of all the patterns, I think is the one to pay close attention to. It is still fairly young compared to the others, but is also the most potent," end of quote. 4 weeks ago, prices punched up and out of this ascending wedge pattern that had morphed into a bull channel and reached all its topside targets as well. So where has that left us? Well, the break higher has been filled with hesitations, and these have helped create the three patterns we now have that were formed over April. A bull flag in the first half of April that reached its initial topside target, then a spike upwards in the middle of the month, and then a possible hesitation in the second half of the month that looks very much like a possible bear flag. It is a slim bear flag, but it had potential down to target X in the 30,000 zone. That is not all, as together these two congestions plus the spike together made up a very narrow head and shoulders top pattern with a fairly flat purple neckline formed over April, currently 31,435. The potentials for such a pattern are a primary target X2 down in the 29,045 zone and a secondary hard to reach target X1 down in the 26,750 zone. I finished off last week's commentary by saying, and I quote, "It'll be interesting to see if the market has the appetite to take these targets on, or, as we have seen today, the broken bright red upper trend line of the old bull channel still has some energy in holding up prices," end of quote. Well, the broken bright red upper trend line did hold up prices, and on Friday the market closed back up over the purple neckline, and today has seemingly gapped even higher. This has all put the kibosh on possibilities of targets X, X1, X, X2, X3 and X4 being realized. I'll keep them on the daily chart for one more week in case this rally turns out to be a forced break of some form, but it looks like the slim head and shoulders pattern formed over April is not a topping action, but possibly a continuation pattern, and maybe even morphing into something else. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.